Let's ask Dan Geltrude, a certified public accountant and market analyst. Welcome, Dan.
Good morning, Rachel.
So let's talk about why the stock market is reacting to these fears of inflation.
Well, the stock market does not even like the prospect of interest rates going up. Now, what the Federal Reserve will do in periods of inflation is they will raise the interest rates. When interest rates go up, people, or investors rather, will be tempted to pull out of the stock market and go into something, let's say, a safer investment like bonds. So that's why we're seeing the market react this way, because the Federal Reserve is talking about raising interest rates sooner than expected.
Yeah, and in fact, they said that they're talking about 2 rate hikes just in 2023. Do you think that will happen?
I think it's going to happen before that. We are in a period right now where I believe a lot of what's happening related to inflation is policy driven. So these policies coming out of the Biden administration right now, like spending trillions of dollars and encouraging people to stay home and collecting unemployment benefits, those things are fueling inflation. If those policies do not change, then I believe inflation will continue to rise and it will force interest rates to go up, and therefore the stock market again will retract.
Well, I'm not a financial expert, but I don't see any chance that these policies are going to change, in which case inflation will continue to go up. So what would you say to the average family, people, sitting around their kitchen tables right now going, how can I protect myself in very practical, easy ways against this inflation?
As far as investing goes, I'll tell you what not to do. And Pete may not like this, but don't go out and put your money in Bitcoin.
I'll tell my husband that. That's the only thing we fight about, by the way, Dan, is Bitcoin. So you say don't do that. Interesting.
I would say don't do that because it's simply too volatile of an investment for the average person, as well as some of these meme stocks like GameStop. What you want to do is make sure you have a diversified investment portfolio. If interest rates do go up, then you may want to look at moving from stock investments perhaps to more bond investments. But again, it's all about diversity because you want to hedge against whatever risks there are in the market.
Yeah, good. And I want to talk to you really quick about the death tax, because the death tax was put in place in the United States to sort of prevent very wealthy dynasties, from continuing to pass on and creating dynasties by passing on this massive amount of wealth. But what the Biden administration is proposing would affect people who are passing on even $1 million of property or business or wealth onto their children. A lot of middle income families are unhappy with this and say that it will cripple their children, that they'll actually have to sell the business or whatever to pay Uncle Sam for what their parents had worked for. What say you?
I say there is a reason to be concerned, primarily because Joe Biden is talking about substantially increasing the capital gains rate. And on top of that, as it pertains to the death tax, instead of realizing a capital gain when you sell an investment, the capital gain would be triggered upon death. And that is the risk. So capital gains over $1 million would be subject to, as proposed, a much higher tax. And if you've inherited an asset like a business or a home that you have these gains trapped inside them, well, you may be in a situation where you simply don't have enough cash to pay the tax, and therefore you end up being forced to sell the assets you inherited.
Yeah, it's really outrageous. And so many parents and are working hard to pass on their wealth to their kids. That's something we do. And so anyway, we're going to have, thanks for joining us, Dan.